Bom dia a todos. É um prazer estar aqui na SatisConf. Now going to English so that everybody can understand me. So we are here to talk about institutional adoption with great guys from the industry. I understand it started with Michael Saylor in MicroStrategy, and then we had Tesla, which made a lot of people know of Bitcoin when they said they would accept it. But this year we had a really important milestone, which were the approval of the ETFs. What do you guys think about it? Like how this impacted the institutional level of Bitcoin adoption?
I was having a hard time understanding the question. I apologize.
No worries. How do you think that the ETFs approval impacted the institutional adoption of Bitcoin?
So I think when we look at the ETFs, everybody's well aware that they've had the best performance. They came out of the gate relative to any other rollout, to include S&P 500. I think the parallel that a lot of people like to use is the gold ETF, the GLD ticker. And when you look at the first year performance of any of the Bitcoin ETFs, in particular the Fidelity one and the BlackRock and Cathie Woods and the others, they've outperformed GLD to magnitudes in excess of 10x in that first year. And we're not even through the first year yet. So I think this wasn't something that Wall Street was necessarily predicting or expecting to see. I think they thought it would be okay. But this type of rollout with this type of performance has basically rung the bell of every single major institution on Wall Street. And I think what it's done is it's forced them to say, what the hell is this? Maybe we should learn more. And if there's one thing that I think Bitcoin does really well, whether it's an ETF or just buying it individually, is once you see that price action, or once you see that adoption rate, or once you see these volumes that they've never seen before, people take a step back and they're saying, what the hell is this thing? And they do more research, and then they start to discover, whoa, this is way different than anything that we thought it was. And so from that vantage point, I think it's really important.
Yeah, maybe I could add a little other, some extra information from what we're seeing at River. So before the ETF launched, I did some research to try and figure out what the impact would be for our business. And for context, we serve consumers in the United States and also small and medium-sized businesses. We make it easy to buy and sell Bitcoin. And one of the questions we were trying to answer is, will the ETF be good or bad for us? Because you could argue it would be bad for us because now a lot of people will just buy the ETF instead of buying real Bitcoin. And so I did some research into this before the ETF launched, and I actually came to the conclusion that the Bitcoin ETF would lead to more people buying physical Bitcoin. And the reason that I came to that conclusion was because I did some research on the gold ETF when it first launched. And actually what we saw was when the gold ETF launched, physical gold ownership in the United States also grew dramatically. And we saw the exact same thing play out with Bitcoin. Once the Bitcoin ETF launched, the amount of people signing up for our platform and buying Bitcoin went through the roof. It was probably the best thing that's ever happened to our business. And so I think what it did was, one, it drove the price of Bitcoin, which always brings a lot more retail to Bitcoin. But also, I think it now just gave people and institutions permission to buy this asset. And a lot of people are still just buying the real thing, but because there's an ETF, they feel like it's now okay to.
So we, at our company, we talk directly with institutions because that's the side that provide liquidity for our platform. And actually, every second talk we have, everyone just mentions ETF. And in particular, they mentioned that, yeah, we started researching Bitcoin due to the fact that BlackRock launched ETF, and we decided we want to hop on that train. So I would say from the direct communication with institutions, that helps a lot. I mean, I would say we have doubled the amount of institutions that are actually interested in Bitcoin for last 6-7 months. And I think as President Trump will go in power with his strategy, which also should significantly improve that, we'll see 10x of companies and banks and institutions rushing into market either to buy Bitcoin ETF, or hopefully to engage in some kind of activities and buy the real Bitcoin, or do Bitcoin-backed loans, or do whatever they want to do with Bitcoin.
So, something that I think is an important highlight on this as well is we've seen this performance as far as funds flowing in there, and you don't even have derivatives being stood up on top of IBIT and FBC and all these other ones yet. And let me tell you, the reinforcement of what that means once you start putting derivatives on top of this is going to take it to even crazier levels as far as adoption levels and funds flowing into the space. So I know most people in this audience, and we have Alex here, as far as like self-custody and all those things, we know is paramount and the best way to own Bitcoin. But as far as like adoption goes, I think that standing up the derivatives, which did that happen yesterday, or it's happening very soon, that they're going to be able to start doing options and things like that on top of these ETFs. It's going to be crazy, the amount of inbound liquidity that's coming into the space because of just that alone.
Max, you connect both companies that want to lend and want to borrow Bitcoin, that with Bitcoin as collateral. What do you see that were the key differences in the due diligence process that companies do regarding Bitcoin this year comparing to a few years ago?
I would say that, we have also a second project which is more into micro-lending and for private individuals, which is HODL. So definitely the most impactful thing in lending markets is actually price action. So when the price of Bitcoin goes up, Bitcoin lending goes up as well. And not many people understand that it's actually also very good to borrow when the price goes down, because you can rebalance your LTV and you can avoid liquidation at the lower prices if you borrow at the lower prices. But what we see that, again, if we talk about institutions, there's actually more and more institutions trying to borrow now comparing to the last year. And another interesting thing, if we can call Bitcoin companies institutions, then Bitcoin companies are started to adopt Bitcoin treasury strategy. And obviously one of the ways for them for not to sell Bitcoin is actually borrow against that. So we see an inflow of Bitcoin companies that has certain Bitcoin on a balance sheet. They don't want to sell it, they want to borrow against that. We actually already help a couple of companies to borrow against their treasuries, to launch new products, to pay for their operations, to do whatever they do with the money. So that use case is actually growing.
Alex actually did a post about that recently, right? That River is putting all the treasury in Bitcoin, apart from the runaway of 1 year, I think. And what do you see as the main challenge for institutions in terms of custody? Because BIP is a Bitcoin company as well. We understand a lot of the environment, but for companies that are not from that and decide to buy Bitcoin, how should they treat with it, and what are the main challenges they face?
For custody, you said?
Yeah.
Yeah. So I think the first thing to answer is, so which companies are buying Bitcoin, or what institutions are buying Bitcoin? And what we see is that it's always a business run by what I call an orange-pilled dictator. So it's always a company run by somebody who has enough power in the business, usually a founder, to just unilaterally say, we're buying Bitcoin and we're going to do this. And so that's still like the category of companies we see buying Bitcoin. And so what that means is when an individual Bitcoiner, or when an individual gets orange-pilled and that person also runs a business, they inevitably then, bring their business along with it. So from the custody perspective, they're usually keeping their funds with a centralized custodian like River. Most business clients that buy Bitcoin at River keep their funds with us. A few people really want to self-custody their business Bitcoin, but by and large, people go with the custodial solution, so they go for a company that they feel like they can trust their custody. And so we've done a lot there. We do proof of reserves to try and make people feel very comfortable in our custody solution. But most people are going with custodial solutions for custody from what we see.
And Preston, what do you think about companies in the past having Bitcoin was a huge risk, and now I understand that in the near future, or even now, it's a risk not having it and not having exposure to it. Do you think that it has shifted sides in terms of the risks of having Bitcoin or not having Bitcoin in the treasury? Like everybody's going to have some in the future?
Yeah, I definitely think that they're going to have it if they want to preserve as much of their buying power as they can that they've, have there today in marketable securities. And I think that's the big shift is if you're a company and you've got a balance sheet, you have two choices. You can take that capital that your profits, your retained earnings that you just made, you can reinvest it operationally back into your business based on whatever type of return profile you think you can get by either going upstream, downstream, or wherever your product line is today. You can invest that way, or you can invest in marketable securities. Call it Apple stock, Microsoft. And this is how companies have typically retained their earnings, is they invest in these other companies in a non-operational kind of way, and they just let it sit there, and hopefully it'll compound at 10 to 20% annualized because they don't have other things that they can do operationally. When we look at Bitcoin's return profile over the last 10 years and what many of us are expecting it to continue to do moving forward, I think that if you're a company and you're not having some type of exposure, whether that's 1%, 5%, 10%, MicroStrategy has done it very demonstrably by basically taking everything that used to be marketable securities on their balance sheet and converted it all into Bitcoin with nothing else. And so what I find interesting about that company, and I know we talk about it a lot, but why I think it's so important is because they've done it in such a demonstrative way where they've done it with 100% of what would normally be marketable securities on their balance sheet. Instead, it's just Bitcoin. And it's this education, or it's like this PhD lesson for everybody else in a large cap company setting to look at this thing and say, well, look, if we would just do 10% of what they're doing, not all of it, but 10% or 5%, what would be the performance on our balance sheet for these things? And if you don't think Apple, look at Microsoft. They're literally being pushed into a vote in December. The board doesn't even want to do this, but they're pushing it to the shareholders, and we can pontificate or come up with whatever reasons we think that that's happening the way that it's happening. I personally think it's BlackRock kind of pushing on them because they own so much Microsoft shares to force them to a vote to potentially put Bitcoin somewhere in that treasury, percentage-wise, who knows. But this is a turning point. This is huge. And let me tell you, if Microsoft starts putting it on their balance sheet because of a vote that was a very strange vote that happened in December, and you don't think other large cap companies are going to be looking at doing the same, I think you're missing the narrative, and I think this is a way bigger narrative than maybe the market's accrediting it to.
If I could I add to that? So to double down on what Preston said, I think the next big event is for a company not run by an orange-pilled dictator to buy Bitcoin, like a big one. Like that happening will be a huge milestone, and it hasn't happened yet.
Well, and sorry to keep going on. A lot of people didn't cover this. You had Goldman Sachs back in the summer that bought, I think it was $500 million worth of IBIT and put it on their balance sheet. This is huge. This is not them selling a product to a bunch of retail people to collect a fee. This is them saying, we think this is so important as an asset to put on our balance sheet, which would normally be a marketable security, to retain our retained earnings or to grow our retained earnings, and we're buying Bitcoin, right? Few people talked about it, and I think it's massive that you have a company, a bank, one of the most premier banks in the world, that's literally putting it there for savings and preservation of capital.
Yeah, the shifting the mindset of people in the institutional level is really amazing what happened. BlackRock used to say it was money for traffickers and everything, and now Larry Fink is in Bloomberg every day almost defending Bitcoin. And even pension funds, which are institutions that have to be quite conservative with the money of their funds because it's the life savings of people, are buying Bitcoin. What do you guys understand is the impact of that on the market?
Sorry, can you repeat the question?
The impact of pension funds buying Bitcoin, which are institutions that have to be really conservative with their investments, and even they are studying and entering the market?
I would say the most conservative institutions are actually not pension funds. I would say these are insurance companies. These guys are like crazy conservative, and it's for them it's actually too early probably yet. But I think to comment on the Preston take about Microsoft, I think as soon as this is going to happen, then everyone's going to just again rush to the market, even like insurance companies. Regarding the pension funds, well, some of the pension funds are actually pretty much flexible, and they sometimes act as a hedge funds, so they have aggressive strategy, and it's not like depends on the country, of course, and depends on the profile. It's also kind of some countries are more entrepreneurial in the spirit, some countries are more developed and they have like more conservative approach, but I think like there has been already pension funds buying Bitcoin or buying shares of ETFs, and I think there have also been pension funds investing in Bitcoin startups. So I think it's for them it's like a logical step, and I think the managers of pension funds, they do understand that something is wrong with the money. I mean, inflation, money printing, etc., and their main goal is actually to preserve pension and savings of the people. So I think for them, it's only logical to buy Bitcoin, and I think that's for me. Like as soon as there will be insurance companies buying Bitcoin, I would say that's a very high bullish signal, because again, I believe these are the most conservative institutions on the market.
On the insurance company front, I find this to be super interesting. I find it fascinating that they're so slow to like really kind of see what in the world's happening. Berkshire Hathaway is a great example of a company that has Geico, inside of it. Whenever we look at the size of what Berkshire Hathaway is doing, I think they're squatting on close to $300 billion in cash equivalents. And so a person would look at that and say, why are they squatting on so much cash? And the way Buffett looks at markets, he's saying, all right, equities are priced at, and but just take a PE ratio, flip it upside down, it'll give you a yield. You're like 3% or less is where the equity markets are priced today. If you go out and you look at short duration, 3-month money in U.S. Sovereigns, you're getting 5%. So do I go out and buy this thing that I only have 3 months of duration exposure to that's giving me 5%? Or do I step into the equity markets giving me 3% or 2.5%? The choice is really simple. You're going to own the thing with 5% yield. So what I find really funny is they're buying this and they're saying, well, there's nothing else on the entire spectrum of things that we can invest in with our $300 billion that's going to give us a higher yield than 5%. So we're just going to keep stacking it in 3-month money in sovereigns, U.S. sovereigns, and we'll wait to see if there's any better opportunities coming along. But in my opinion, what I would imagine these two also agree with is that's assuming you actually think that inflation is 3% or 2% in the U.S. And I think everybody here that's looking at what we've experienced since COVID from an inflation standpoint knows that 3% inflation is asinine. You're the idiot at the table if you actually believe these numbers. And it appears that all these insurance companies believe the numbers. And it's like, when are they going to wake up and realize that the number that the government's telling them is a lie? And if you continue to hold this 3-month sovereign that's giving you 5%, in real terms, you're getting your face ripped off, right? We see it, we feel it. If you hold Bitcoin for any 4-year holding period, you realize very quickly that if that's how you're doing your treasury management as an insurance company, Farmers, Geico, you name it, and you're squatting on hundreds of billions to protect your premiums for all these contracts that you're writing into, you're going to get killed. So what would we expect if they continue to do this? We would expect to see the erosion of the terms and conditions of all these insurance contracts. Okay? And this is where you totally get screwed as a customer. Everybody in here has insurance of some type. You know how they're paying for this? They're diluting the terms and conditions when you actually go to collect. It gets harder to collect. But this is a soft change that is ephemeral and difficult for you to detect or see because you might only have an insurance claim every 5 years. But rest assured, when you go in there, and because maybe your premiums are slightly going up, but it's not that they're just going up. It's that they're eroding the T's and C's of the contract, and you're getting crap when you actually go to collect your claim. Okay? So that's how they're paying for it, because they're not waking up and actually protecting the Treasury, the $300 billion or whatever's backing, I don't know what the number at Geico is, but it's very large. The float is what it's called in insurance terms. They're not backing it with Bitcoin. They're backing it with U.S. Treasuries, and they're totally getting eroded. And who pays the price but the customer? So sorry to go off on a long dissertation there. It's very frustrating to me because I see a bunch of consumers getting just wrecked, and they don't even realize it because you have to keep reading the updated terms and conditions of these contracts that they keep rolling on you.
And what do you guys, what do you guys understand its MicroStrategy's role in all of that, considering that they allow both capital allocators that buy stocks to have exposure to Bitcoin, as well as bond allocators to have exposure to Bitcoin? Like, what's its role in all of that and its importance to the evolution? You couldn't get it, sorry. What is MicroStrategy's role in all of that, considering that bond allocators can now have exposure to Bitcoin, buying Bitcoin, MicroStrategy's bonds?
I think the question was with respect to MicroStrategy's bonds or fixed income, their convertible debt. I think that this is another example of MicroStrategy just doing something in a very demonstrative way. So let's say you have a mandate for fixed income. We're talking 100 trillion market cap in size, just to kind of give you context of how big the fixed income market is. If you have that mandate, and let's say you're working at a bank that the only thing that you can own, or you're working in an insurance company and the only thing you can go out and buy is fixed income, the best performing fixed income instrument that was on the market in the past year was MicroStrategy debt, convertible debt. So if you're not buying, because the performance actually exceeded that of Bitcoin itself. If you're not paying attention to that and you're in fixed income, I think you're lost, and I think you need to wake up. And I think if you're a company that's not thinking about, especially a profitable company, and you're trying to raise funds in order to buy valuable things on your treasury, your marketable security side, and you're not thinking about raising it through some type of convertible debt market because your coverage ratio is good, your debt to equity is good, and you want to step into the market and do these convertible debt deals at 5 years duration with 75 bips or 50 bips of coupons that you got to pay out over that period of time because it's convertible. That's how you can get those really low yields. I think you're crazy. You need to tap into this when you got inflation at 5% plus, and I think I'm being very kind. It's a huge opportunity. So yet again, another demonstrative thing that you're seeing out of MicroStrategy that I think could be carried out by so many other companies that are profitable in the market, way more profitable and growing top line. MicroStrategy doesn't even have that. It's flat. So I think there's a huge opportunity there for many publicly traded companies.
Unfortunately, we're reaching the end. Any closing thoughts from you guys that you'd like to mention on institutional adoption and where we are heading?
Well, I think we're heading for institutional adoption. We're actually already there. It's only a matter of certain factors certain checkpoints we need to check in. And I would say I'm a bit concerned that there will be price action that will not allow individuals buy more Bitcoin, because obviously if the institution is going to rush to the market, the price will go up. I'm also concerned that with institutions coming into the market, they might try to manipulate the market, not in terms of price, but in terms of the rules. And I'm going to share concerns as my final thought. One of the main concerns also goes with the regulation and enforcement of the regulation, because again, institutions can effectively lobby rules and laws that are not always profitable or beneficial for individuals. And if we will remember that Bitcoin initially was created for individuals, by individuals, and for us to be like sovereign individuals. So I would say it's really good what is happening, but we need to be a little bit more cautious and less supportive of some of the price action that is happening, and always look back and ask ourselves why we're here, what was the initial goal of Bitcoin. So that's basically my final thoughts.
Yeah, I would second that strongly. I deeply agree with that. I think that institutional adoption of Bitcoin as it becomes mainstream introduces a lot new political forces. And so we definitely need to pay attention to that as we're helping craft new legislation, new laws, especially in the US, since that often sets the tone for what the rest of the world does, and that's something I'm paying close attention to. I also think that another big unlock is going to be once banks can custody Bitcoin and borrowing against Bitcoin can become cheaper and cheaper. So that's a trend that is also worth paying attention to. We're not there quite yet. There's still a lot of work left to do. Right now, it's still a lot more expensive to borrow against Bitcoin than to borrow against a house, which is kind of crazy. And so that's another big trend worth paying attention to in the years to come. And so I think my parting thoughts will be we have to keep working hard. There's a lot left to build. We should keep staying humble and keep thinking adversarially, but we're winning.
So Matt Odell was on stage yesterday, and he had a closing comment that I thought was great. He's saying, I think we won. I think Bitcoin is going to continue to accelerate from here. The institutions are arriving. They've finally figured it out. They're going to come in this coming 4 years, especially with the political change in the United States and how conducive that's going to be from a policy standpoint. I think these institutions are going to show up in style. That's a store of value thing. When we look at Bitcoin from a payment standpoint, we still need tons of work. It's not assured that Bitcoin is going to be used from a payment standpoint in a way that isn't compromised from a KYC standpoint. And when we get into privacy and how important privacy is to Bitcoin, this is something that we need to really guard against. We need to educate people, and we need to take it really serious that Bitcoin is used as payments, because without and it's privacy enhanced from a payment standpoint. And I know this is an institutional panel, but I think this is such an important point, because where we're carrying the torch next, it was all about store of value, I think, from inception till now, and getting to this point where it could ramp and get large institutions to truly treat it as pristine collateral that we all knew it was. But I think moving forward into the next 5 to 10 years, we need to make sure we get this very right from a payment standpoint, even though the institutions are going to lean into this like crazy from here on out.
So if you own a company and you're listening to us, please buy some Bitcoin for your treasury. Thank you, everybody. That was it.